The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 8th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Right now is not too soon. Dial on in at 877-927-6648. If you can't get to a phone or you can't call in, you can always send me an email, steve@tfnn.com. Inside that heading, please put radio show question. And, of course, inside the Tiger's Den, well, any ping will do, Vasily. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 16 points at 22,134. The S&P, that's trading up 3 points, so basically flat. The Index 100 up 0.4%, trading out at 59.60. Russell 2000 slightly green, up 2 points. Semis are up about 0.4% as well. That's 5 points to the upside. Trannies are up 11. They, of course, formed that nice little Gartley buy pattern last week. I believe it was on Thursday. So they have got higher to run. You've got gold off a buck, silver up 16 pennies, light sweet crude off 30 cents. Priceline.com is a dollar leader to the upside, up 20 bucks or 1%. FibroGen up 16 bucks, 48%. Asparian Therapeutics up 11. Tesla up 11. Charter Communication up 11. Polo, the Ralph Lauren company, up $8 or 11%. Michael Kors up 22% or $8. To the downside, it is Albemarle Corp. That's a stock that we looked at yesterday. So it looks like it's taken a bit of a breather off $7 right now. That's 6% to the downside. Henry Schein, I think they were out with earnings or something like that. Maybe we'll take a look at that equity. Henry Schein is not shining today. It's not shining brightly. It's down $7 or nearly 4%. Sykes Enterprises down 19% or $6. AutoZone in the red zone off $5.50. Wayfair Inc. down $6. So we've got plenty to look for or look at. Of course, I want to look at what you want to look at, and I would say, well, our first question comes in from John in Sarasota. John, how you doing today? John writes, do you see either Cisco or Qualcomm moving up? So let's go take a look at it. Cisco, CSCO, is the ticker symbol. So I'm going to put it on both screens out here. You'll see it on the dark black screen here momentarily, and we'll see what the market profiles give to us. Oh, I've got this going on today. That's a bummer. I'll reload all historical data, and we'll get it back in time. So if we take a look at Cisco, moving on up. If we take a look at it, right now it's trading out at about 31.82. And so, John, what it needs to do, it's trading. You can see it's trading after this thing had gapped down with big volume. That was on the trading day of May 18th. Volume there was about 85 million shares. It's just been trading sideways within a banded range. That bandito range is from the low of about 30.79, the bottom of its weekly box. The center line of that TAS market profile for the weekly time frame pretty much is dead solid center. So it's not providing us with a bullish or bearish structure. The top of the box is 32.48. So to answer the question, do I see it going higher? Again, I don't know that time frame that you're looking for, but here's what you need to see in order for it to break out above and fill that gap, so to speak. You need to see a close above 32.48. That would go a long way to letting you know that, okay, price is going to fill the gap. Now, filling the gap only requires, this is where the stock broke down, this would be coming back to a breakdown area, just like you want to buy stocks coming to a breakout area. If you wanted to sell Cisco, you would be looking for patterns in price behavior. If price, in fact, were to get up into the 33.14 level out there, that's its a real resistance if it can clear 32.48 out there. Is it a bottom? Do we see a bottom after that gap to the downside? And the answer is no. All that we do know is that that swing point, not the bottom of it, but the swing point was tested. So there was 85 million shares on that gap down. Then it was tested with 24, 20, 15. It does appear that the sellers, in essence, are gone from this. But what you should anticipate is just sideways movement between about $2 worth, 30.79 to 32.48. Now, the second stock that you were looking at was Qualcomm. So let's go take a look at Qualcomm, QCOM, and let's go see what this is doing. So we can see Qualcomm had a breakdown as well. This was quite a bit earlier. This is back in January. Yeah, January 23rd. This thing had gapped down with 94 million shares, and since then it actually made a low out here February 2nd with 14 million. That was tested with 24 million. That's not how you like to see lows tested. That second low came in on April 20th, and then that was tested with a nice big bullish reversal signal, 34 million shares out here. And then it went ahead and made a move up into this gap. So this also has got a huge gap that it's contending with. Now, in the case of Qualcomm, John, QCOM, this is what it looks like. It's unfortunately the market profiles here aren't providing you and I with a whole lot. Daily and weekly each have the center of the box truly in the center, and therefore it looks like the price range right now is from this morning's low in the 52.55 area. 54.15 is the move to the upside. Even 55.05 would be a move to the upside. You want to see price break through that. In fact, there was a secondary gap recently to the downside, breakdown 35 million shares on July 20th. So that says the real resistance on this, not only is it the weekly profile in the 55.05 level, but really you've got to take 56.01. So no clear sailing until 56.01 can be cleared. Do we see it moving to the upside? Yeah. 55.05 is probably your target. To the downside, 51.85 is probably your support area, and that is on Qualcomm. That was for John in Sarasota. Now, with regard to the markets out here, we'll get to those when we get back from this break here. That's going to come up in about 7-8 seconds. The Dow, $18 to the upside. S&P's up 4. What else do we have out here? The bull run continues, at least as of 1:14 in the afternoon. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So, question that came in, I'll check the emails as well, by Vasily Ping out here says, Steve, well, it doesn't really say that, but it says, on the ESU7, the September contract for the ES Mini, are there any Chapman wave counts that suggest the rally pattern at 2488 high is completing something? And that pattern, just with regard to the past 2 days or past 2 weeks out there. So if we take a look at past 2 days, I'd have to, I'd go down to a 10-minute chart as an example. And the answer there would be certainly not on the 10-minute chart because, well, that was just simply one leg this morning that we saw. So coming off of the low, which was a trend line, that black line, if you watch this on TigerTV on the bottom of my screen here, this was at 950. That was price coming back into a trend line of all things. And you can see the red diagonal trend line. Price was able to break above that at about 10:20, it looks like, 10 o'clock, 10:20, and only a single leg to the upside. There was a hammer candle, by the way, that formed at 110 this afternoon. This is a 10-minute chart we're looking at, so we got candle number 2 that's going to go ahead and close. So on the 10-minute chart, no, there's not anything there to suggest that there's some type of turning point. On a 30-minute chart out here, no, not really. I don't see anything. Maybe you're in wave 6. Maybe you're in wave 4. All price has done so far is come back and test Stevie's red line. So I'm not seeing that as a topping pattern, Chapman wave counts, if you will. If I look at the 2-hour chart out here, the 2-hour chart time frame, if we don't use the proper candle where we made the low was this big wide-ranging bar. This takes us back July 27th. So that's well beyond that's a 2-week period. So we work with inside there. If I really use that candle out here, we're only in that first leg to the upside. If I use the one after that, which is not the system I subscribe to, I think Basil does. And again, so I'm looking at wave counts different than really the Chapman wave out there. Then you can extend yourself into that 7th wave, I suppose. But since I don't utilize that, then I'd be giving you not information the way that I'm using it. So hopefully that assists you. I don't see any other pattern on a 2-hour chart that would get my skirt up into a tizzy. Not that I have a skirt, but I could get into a tizzy out here. If we take a look at the 5-hour chart, one thing that does exist is that price has been moving higher with less relative energy. That's that diagonal line that you see on my screen. But there's no bearish reversal candle here. So that's just a warning sign. We can see that this has recycled if we take a look at wave counts because of that wide-ranging bar to the downside. So the reality is even on this 5-hour chart, we're only in that first leg, so to speak. But I pay attention. I give more priority to price moving higher and with less relative energy as long as the right parameters are met and then the right signal comes along. And then finally on the daily time frame chart out here, what we know is that price looks like it just simply recycled off of the lows here from May. We saw that 7th wave move come in, and price is right now slightly above that area. Price is above Stevie's red line. If we were to close above Stevie's red line, that would be a pretty big positive for the ES Mini out here. I'd give you that number, but it's almost hidden. It's probably around 24.80 is what we'll call it at this stage of the game out here. So that being said, if we don't see any reversal signals as of 1:22 in the afternoon, then what I would just simply resort to ES Mini-wise is try to figure out, hey, where are we at? Where are we at using horizontal trading ranges? And where we be, my friends, is that last month, the month of July, we saw a close above the ceiling, what should have been the ceiling, 24.54. And now what we're seeing is extended follow-through out here. Now, what's on my screen out here are not the midpoints, just simply the solid major ice pivots, so to speak. And this would say that the ES Mini wants to run to 26.76 and change out there. So as long as it stays above 24.52, we'll call it, then in your 24.82, so you now have 30 points to the downside. 30 points to the downside would be nothing more than a test of support, the horizontal trading range. Now, with regard to the S&P 500, the numbers are going to be different. But if we take a look at that, only different from the standpoint of the cash indice. If I look at the weekly chart out here, I'll go ahead and put the weekly chart back up on the screen. Again, from a weekly basis, what we saw here was that price back on the week of July 17th closed above its horizontal trading range level of 24.63. And that says to you and I that price wants to make a run for the 26.90 level. It doesn't tell us how long it's going to take to get up there. And there's a mid-ice level, mid-resistance, potential resistance zone at 25.76. But in the cash indice, as long as the S&P stays above 24.64, keep your shorts at the dry cleaner. There's no reason. You're an intraday trader. I'm not really speaking to you intraday traders. That's a whole different matter out there. But 24.64, a pullback of, in this case here, 20 points. Blah, bah humbug. It's no big deal. It's just simply testing a breakout area of a horizontal trading range level. Now, the monthly chart out here, monthly chart, you and I have had this price target of 25.68 next on our screen for a long time because we saw that breakout back in February 2017. So this is above the midpoint level, which is 24.49. So it's on its way to 25.68 before it runs into its next ceiling. The daily chart, we can see that price has just simply been tinkering around the 24.75 type area. Yesterday, bounced off of it. Today, a little bit of a bounce off of that as well. You get back below 24.75, then pullbacks into the weekly 24.63 level would be justified out there. So that's what I see with regard to the ES Mini as we speak right now, with regard to carrying that over into the S&P 500. And thanks for asking. Now, it's going to be a lot easier for the ES Mini, for the S&P, for the entire market to continue moving higher. If, in fact, today you see that NQ close above 59.60, we'll call it 59.61. Because why? Because that's the top of its daily TAS market profile. Now, there is that good, big, and it is a big one. It's a gargantuan one. Well, sort of gargantuan, but it's a big one from July 27. That big old bearish engulfing candle. So realistically, resistance is at 59.95. So you've got two levels to be watching. You got that 59.95, and you have 59.60. You close above 59.60. That says 59.95 is game on. Not only that, you close above 59.95, and then you're back to the 61.13. And at 61.13, the 1-to-1 A to B equals CD to the upside. If you think that's where price is gonna, you think that's where price is gonna stop, I've got a bridge. Wish I had a bridge to sell you, because that is just simply not the case. And how did that guy? What was his name? Harvey. How did he end his going into his break? And that's, what was it? And that's the news? Something like that? And that's the news. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow just turning us red here off 6 points. The S&P is about flat. So we've got a request to take a look at gold and the GDX. If we're going to do that, what we want to do is look at the Japanese yen. So let's go ahead and put that in the old system here. And let's just see if we can get some, you see it's trading a bit higher today. Let's do this. Let me switch over to a different page where we can see some multiple time frames out here for the futures contracts. We're going to take a look at the futures contract since it's really directly correlated. I don't have, as you know, I don't have a delay out here. We're going to look at 30, 60, we're going to look at 62, 40 daily and weekly profile levels out here. So now the correlation with regard to taking a look at gold would be if the yen futures are rising, then gold futures would be rising. So as we take a look at the yen futures, the first panel, the 60-minute time frame, what we're going to see is there is a brand new market profile that formed out here back at about 10 o'clock this morning. And price is now back inside that box, the bottom of which, Danny, was 90.9062. 0.9076. So what should occur out here is we should see, because the structure of this box is bullish, we should see the yen get up to 0.9086 out here. I don't know if that's going to act as resistance. It is resistance. If it breaks above that, that would be a bullish signal. 240-minute time frame is already bullish. You can see the green shoots there. There's no resistance that it is contending with. And so we move back over to the daily time frame. And inside the daily time frame, we can see that each push lower over the past, since the since the profile formed, August the 3rd, that it's really been that center of the box, that point of control that has acted as a level of support. Price hasn't closed below that, which was 90.42. So looks to me like what the yen is going to do is make a run. We'll call it 90.977, and if it gets above that, then that would be certainly bullish for gold. Is it bullish for the GDX out here? If we come over to it and we take a look at the GDX, I believe it's trading at about 22.21 as we speak right now, and the answer is no. It needs to close above 22.42 to get its bullish dance step on. Now, what it really needs to close above, that was, by the way, Stevie's red line. It's on a different chart, on a different screen. There's no reason for me to pull that over out here. There is a level of support you'd be watching for. That's going to be the 2208, the bottom of the daily box that was tested here earlier today. If the GDX were to close below that, then that's going to signal to you that 2071, or at least the prior swing point, which would take into the July 7th, July 10th level, would be the price target. So the lows out there. So watch this 2208 level. And with regard to gold specifically, let me go ahead and put up the December contract out here. Give me a moment to get this thing fired up. And we'll take a look at that, see if my other chart out here. There we go. So if I take a look at the December contract for gold, we're trading out at 1262.90. And a key level here in gold, this is where we have a little bit of divergence. And by divergence, what I'm referring to is we saw that the yen, the price was above Stevie's red line. For the last 3 sessions now, gold is below Stevie's red line. And that says that further pullback should be anticipated. The thing is that what you and I know, at least there used to be, a couple of TAS market profile bottoms that are support that still have not been taken out. So if we take a look at those, let's switch over and get back to this chart. Let's go ahead and we'll put up Stevie's synthetic contract out here. And I believe it was the daily and the weekly, if I am not mistaken. Yeah. And so it's 1255.70 and 1253.80. The low so far this week has been 1254. 1254 versus 1253.80. You'd say that's quite a level of support out here. So I wouldn't get bearish on gold until we saw a close below 1253.80. Otherwise, we're kind of in we're in neutral. You're sitting at a stoplight. It is really as simple as that. You're sitting at a light trying to figure out whether you should turn right or left, because resistance is 1265, hasn't been taken out. That would be a nice little feather in the cap for the bulls. Taking out the previous swing point high would be the second feather. And because that price oscillator is above zero, very bottom panel of the screen, yes, Danny, I am still long, and it is just those parameters. It's really just that simple. Close below the TAS weekly box out there, and it will have me out of Dodge. And the reason that I'm still long is because I got in at such a good buy point. If this is the beginning of the next leg to the upside, I won't get that buy point back. So I'm still anticipating that is possible, based on several patterns, I would say, that I'm taking a look at. I did not look at the COT data this weekend. I heard, that they're starting to move towards a net short position, if I'm not mistaken. You probably have that data at your fingertips, Danny. Instead, I'm really trading these patterns, because we've got really good levels of support or resistance to go ahead and pay attention to. Inside the newsletter, I think we're still long by about 10 or 20 cents. Although I've got to go back and confirm that. So, so that's the deal as we speak at this moment. Let me just check. We've got a couple minutes here. Let me just check, see if anybody sent in some email requests for something to go take a look at. And I don't see anything. So what do we want to go take a look at next out here? I know what we can go look at. Let's go look at the advanced decline line. You and I haven't done that for a while. In fact, you and I really don't look at the NASDAQ advanced decline line too often. That's what's up on your screen right now. I don't... let me pull this back a bit here. Now, what you typically see at tops, okay, what you typically see at tops, just as we saw back in the 2000 time period, just as we saw in 2007, is that you will see price continue to move to higher highs. That is the top panel. And what you will see is the advanced decline line starting to make lower lows. Now, that can go on for a long period of time, so you don't use that as a signal. The most recent time we had that divergence out here, that was, what the heck happened to that? There we go. I don't know what's up. I'm going to probably have to rebuild this chart. I don't know why it is doing this. But this was back here in July 2015. You had price moving to a higher high. It's a red line. Upper panel, and you had that advanced decline line making lower lows out there. A little bit of an advanced warning of a impending market top. We don't have that as we speak right now. We have the highest high in the advanced decline line and the highest high in price, closing price in the NASDAQ composite. Each happened on the same day. That was July 26. There ain't no divergence. That doesn't mean we can't get a pullback. What it means is whoever's calling for a major market top, tune into this show. We'll show you what major market tops are made of. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Back to green inside the indices out here. Dow's up 11, S&P is up 2 points. So for Danny in Atlanta, hot Atlanta out there. Danny, you ever go to the concerts in the, where's that outdoor concert theater? It's out by one of the universities, Georgia Tech, I think, right? What's the name of that concert area? My buddy Earl Clue plays there fairly often, at least once, a couple of times a year. I think he does a Christmas thing there, oftentimes out there. In any event, Danny wants to go take a look at American Airlines. AA is the ticker symbol. Not a concert guy. That's all right. If we take a look at American Airlines right now today, it's trading up above and Danny wants to look at this from a long-term standpoint. This is still the daily time frame chart that we will look at. And right now you can see American Airlines, it's trading out at 40.18. AAL? Oh, yeah, sorry about that. Well, Alcoa. Didn't you want to know about Alcoa too? I mean, come on. You're right. Sorry about that. So, well, that makes it a little bit different. With regard to what it's doing. Hey, I only wish that would have been the American Airlines stock, because then we could have said, hey, look, it's breaking above resistance. But unfortunately, we can't say that. What I can say, though, is you had a nice little potential short-term bottom. At least what you know is where buyers are hanging out here. We know that because of both the hammer candle from July 27th and the nice little bullish engulfing candle from July 28th. So short-term, if those lows get taken out, meaning the close below 48.75, then you've got an A to B equals CD to the downside. That's just short term out here. That would set up a Gartley buy pattern. And the price projection area would be 46.27, 44.71, 42.73s. Those would be your price projection areas. But you need to see it close below 48.75. Now, with regard to longer term out here, let's go switch over to the weekly time frame. Let's lose these profiles for us, although the profile that just popped up on the screen, one of them, was the monthly. So let me give those numbers to you. It's not oftentimes we take a look at monthly numbers, but we will here since you asked. And those are going to be the blue lines on my screen out here. So real longer-term support, just using profiles. You can see this monthly profile is very equal in distribution, $43 out here. So closing above 50.96 on a monthly basis would be a nice little positive for you on a monthly time frame. There was a swing point back here in December of 2016. There were 36 million shares. That was passed with only 21 million shares and then 27. So it didn't exactly have the volume out here. We can see if we go back a little bit further, we've got these bearish. I'm on the weekly chart. This is the weekly chart. That was the weekly numbers that I gave you. My apology. I thought it was on monthly. Let's go take a look at the weekly time frame. So you can see where this thing has tested the highs, 3 separate weekly time frames, basically. Or this is at least in the 55, 56 areas where you've got some pretty decent resistance from a volume standpoint. First time that we were up here was with 85 million shares. The next time was with, 230 million. Couldn't do it. So you know that's a real strong resistance level. That being 56.05. And then recently on the way up, only 27 million shares out here. So is there anything that's really bearish about this? Well, you've got, you're up towards resistance. You got a nice little trend line that's in place out here. So the trend is still your friend, right? So that trend line hasn't been broken. Doesn't mean that it can't pull back, but you're in this zone out here. And that zone you'd have to say is probably 46.98 at the perhaps a bottom area, and around the 56 level. Up at the highs. Quickly put the monthly chart up here for you, see if there's anything else, and there's really not anything else that I see out here. So that was American Airlines Group, AAL, being the ticker symbol, versus Alcoa, which would give us a whole different viewpoint of what that chart is doing. Okay, so what do we want to? You're welcome. What do we want to take a look at next? And I suggest you go to a concert or two. Music. It's you got to have a little music in you. Oh, we've got Corey. Corey wrote in here. Corey, I haven't had an email from you, I believe. So thanks for writing in. A new listener, perhaps, or old listener, just a first time emailer could be. Can you look at TAS market profiles on the Dow daily for resistance? I can do it, Corey, for you on the Dow equity futures contract. That would be the YM. That's going to give you the better information. So as we move out here, what we are going to see is the following. Now, he didn't give me the time frames. What we can see here right now is the bummer is that price is trading below a 30-minute market profile. It's trading right on it. I apologize. Trading right on it, which is 22.031. We're trading right now at 20. Is that right? Hold on. Bottom. No, I'm in the wrong spot. Good Lord. Good. Get some glasses, Steve-O. The bottom of that box is 22.082. We're trading at 22.084. So you'd like to see that level hold. The 60-minute time frame, all price has done is come back to an old level of resistance, maybe a new level of support. That's 22.059. 240-minute profile, and I'll assume you're watching us, Corey, on Tiger TV. That way you can go ahead and capture this screen out here, and you can read each of the boxes. So that's good for you. 240-minute time frame, long and strong. Daily time frame, long and strong. Weekly time frame, long and strong as we speak out there. If we look for signals, is a top in, is a scary top in, the answer is no. We have, day 9, 10, 11 days up in a row, which is like an anomaly. All those, because we've seen that happen like 3 or 4 times going back to 1986. I'd ask you to go back and take a look at those charts and take a look at those other 3 times and ask yourself, did that form a market top? Just that one little anomaly. I'm not going to give you the answer. You got to go do that kind of work out here. But if we take a look at the Dow equity futures contract, there's an A to B equals CD pattern that is in play out here that says 22.206 is the next target spot. Does not need to stop there, by the way. And support would be 21,981. Now you get below 21,981, and then we have a nice little retracement that would be in store. But until that occurs out here, the target remains 22,206 inside of the Dow equity futures contract. So Corey, thanks for writing in. I hope that helps you. Let me see if there's any other requests out here. And the answer is no, there's not a single one. How else can I help Corey on that? I don't think I have. Well, I did have the daily. If you didn't see it yesterday, since you're talking about the Dow, let's do this. He's not necessarily everybody tuned in and saw the segment that he did on Tom's show. Oh, it wasn't yesterday, it was on Monday. But so let's go ahead and we'll try to do that when we get back from this breakout here. But what I wanted to show you, if I can get there, I can't find it. I'll try to do that when we get back from the break. Steve Rhodes with TFNN. We'll break up.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 17, S&P's up 2. Hey, Steve-O, in the production room, give me a 30-second note when we're going off air, because the clock is not off here, and that way I can time this a little bit better. I didn't get to say goodbye to you guys yesterday. So back to the Dow. out here. The Dow is approaching, and I was reminded that yesterday actually was Monday. So, hey, sorry about that. Monday, Sunday, Tuesday, sort of doesn't matter. It does matter, but it doesn't necessarily matter. But one of the charts that we took a look at out here was the Dow. This is the monthly set of horizontal trading ranges out here, and they do a really good job of giving you floors and ceilings. They really also do another great job of letting you know when you've broken out above a level of resistance or broken down below a level of support. And it wasn't 20,000 that was a key number, not at least according to understanding horizontal trading range technicals. It was 2562. That said, once price broke above that and price came back and tested it and rejected it, that the Dow wanted to move to 22,237. Now, we don't use this as exact right to the tick. In fact, we haven't seen that high just yet. The actual high today has been 22,179. Not too bad, 179 versus 22,237. But you know what? And can price go above it? Absolutely. But the Dow is reaching a level where it should at least get its first pullback day, or maybe even a bit of a retracement. Now, it may not happen at 22,237. Maybe it's going to be 22,242, which happens to be the daily horizontal trading range level. And if it doesn't happen there, then it's 22,428, another couple hundred points. But you see, we're headed into this zone where we should begin to see the Dow start to hand the ball off. Somebody was talking about football, starting to hand the ball off to maybe back to the S&P and the NDX 100, maybe even the semis out there. I hear the music now. Folks, stay tuned. Your favorite polar bear in mind. David White's up next. That means from 3 to 5 on Tuesday, you've got Tom O'Brien, and 5 to 6, Andy Heck. Folks, we'll see you on Wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.